Nervous about the volatility of public markets? Looking to invest in Canadian real estate but not finding the right opportunities? Neighborhood Holdings may be an option. Nearly 10 years of consistent performance, Neighborhood aims to provide stable income while preserving invested capital, target net yield above 8%. At the heart of the strategy is Neighborhood's mortgage product portfolio of first position 100% residential mortgages across Canada with an average loan to value under 55%. Neighborhood partners with mortgage brokers and financial institutions to support quality borrowers in transition who may not currently qualify for traditional financing and have a temporary need for capital. Neighborhood's portfolio has no exposure to commercial, construction, or bare land properties, is geographically diversified across major urban and suburban centers in Canada. Check out the links in the description or visit neighborhoodholdings.com to view the offering memorandum for investors and advisors or to explore mortgage broker partnership opportunities. This is not advice. Please consult a professional advisor before investing a loonie in any of these investments. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to the Loonie Hour, episode 209. As always, joined by the three amigos. We got the Boomer over in Halifax, Rich Diaz in Montreal. Art Walls slowly coming together.
Slowly. I was going to just jam it up there, but then I realized that'd be a terrible idea. And I started thinking about it, then overthinking about it. It's not very interesting. I got no news, fellas. It's the beginning of the hockey season. I'm very excited. Other than that, nothing. There's so much going on in the markets.
Why do they have to play?
You lasted 14 seconds for the intro before you talked about hockey.
I got nothing going on. My life is boring, and I think that's probably a good thing.
I'll tell you what's boring. Look at Steve's background wall and his shirt. Holy smokes.
Yeah, I'm blending into the wall here.
He's like, ooh, going back. Yeah. So
I want to know, Keith.
Who's the one to know?
Never mind.
I didn't hear it.
Moving on. McDavid signed. Do you see that?
I did. Oh, I have a correction to make. The 49ers are not bad. They're 4-1. I was corrected in the comments. So excuse me.
I love watching the emotions that Rich has with things, like his highs and lows. But guys, I have allergies and they are just raging these days. And so with my reaction, I sneeze, and I am a world champion sneezer. I just let it go. Like the leaves fall off the trees when I'm walking. And of course, in Halifax, if you sneeze in public, people look at you as if, you have the vid, and they just start scurrying. So I'm having a bit of fun out there these days. So if you hear some guy sneezing in Halifax, it's me. And I'm not sick. I just got the allergies. And it puts me in an awesome mood as well. Nothing better. People with allergies, like you feel, it's horrible. It's a death sentence. And then when you sneeze, Rich, you feel like the king. You just feel amazing.
How do you get allergies in October? How does that work?
I don't know. The stuff in the air is moving.
Maybe you're
around.
allergic to that multiplex across the street there.
Oh, yeah. That's still happening. So speaking of multi-dimensional plexus, what's happening, Steve? What do you have for us today?
Yeah, we'll kind of walk you through. We got the Canadian housing stats for the month of September. Those mostly are coming out across major metros. Got some updates on the rental market. Gold, New Zealand, Germany, France, all the central banks, Japan, all the big themes that we've been talking about on the show. So we'll kind of take you guys around the world here and get through that. But the housing stats, Keith. So the trend continues in the GTA. It's funny because I think you read the headlines like, sales are up. They're trending higher. The market's recovering. I think if you're like an economist in the head office there, you're probably thinking everything's moving pretty good. But inventory continues to pile up. So inventory is still sitting at record high levels in the GTA. The MLS home price index, Keith, this is kind of crazy. It's now down 25% from the peak. So it peaked in February 2022. precisely 1 month before the Bank of Canada started raising rates. It peaked. And as of today, it's down 25% from the peak.
That's kind of
Yikes.
funny, actually, or ironic. It's not funny because people are where they are. But you're saying that it peaked just as the Bank of Canada started raising rates.
Yeah, literally like 1 month
Yeah.
before. So they were ahead of the curve.
Which is also implying they were cutting rates back when it was in the other direction.
They were
But
like cutting
it's
rates. The benchmark, I think that in 2021, I think the benchmark price in national, I think was up like 27%.
but it's
Totally
such a
healthy.
mess, though. Yeah, I think everyone would agree. It's a mess. If you're not in the market to sell your property, you just sort of roll with it. It's not a big
Yeah.
deal. But if you're looking to sell, or you put a down payment on one of those pre-sales, or you're looking to buy and you're worried about your job, this is a lot of stress that continues to develop and build for a lot of people, and it's mostly younger families as well. We would love to tell everyone, hey, it's getting better. We won't be able to call the bottom. Steve did once, though, right, Rich? He did call the bottom.
He was right about it.
Yeah, he got that little mini gully part right.
I did get the gully pretty good there.
Yeah, but see, what you're sharing though is that this is grinding tighter still. Like, it's not
Yeah.
getting better.
I mean, I think people ask me all the time, oh, like when's it going to get better, or like what's the outlook? And I just tell, like, I mean, I can't predict the market 6, 9, 10, 12 months from now. There's so many things that can happen globally, policy changes, etc. But the next 3 or 4 months are just like set in stone, right? You're in October. The housing market doesn't turn around in like the depths of December. So you've got October, November, December, January. The housing market starts sort of its normal spring market uptick sort of in mid-February. So like the next 3 or 4 months, like if you need to transact, like the conditions are what they are. They're not going to change. In fact, I would argue prices are going to continue to leak lower, just because if you look at inventory levels, in the GTA, they're the highest in, like, I think it's 10 plus years now.
This reminds me of a conversation we've had before, which is that Steve only works like 4 to 6 months per year, if I remember correctly, Keith.
I think you're right. Yeah. So but it is turning otherwise, there's a lot, seasonality exists in everything. Including the Montreal Canadiens. They don't normally do very well from September to April, I guess, something
Savage.
like that.
It's not nice.
But we are turning into that bit of a grind. And, if we could do that, the time machine, go forward, I would imagine the economic data and trends have continued to deteriorate 6 months out.
Yeah. Well, I mean, certainly in the new housing market, I think that's where the most of the problems, or I should say the bulk of the problems, are in that new housing construction sector. Right? It's like you actually look at the GTA chart, like housing under construction is now rolling over. And if you're not starting like new housing and all your under construction units are rolling over, it's like these tradespeople aren't going to have projects to go to. So normally, you finish one high rise tower, like you move to the next. There's always something coming up in the pipeline for you to like jump over. And I think that's the real, I wouldn't say risk. I think it's happening. It's going to play out, but it's going to play out over the next 24 months.
So doesn't that mean, though, we should have the inventory will peak in the next 12 months, 18, something like that?
No, there's like,
and then it'll self-correct again? Is
there's
that
a huge
right?
lag effect. It's hard to say. I mean, there's still a lot of units under construction, like housing's. Yeah, I mean, it's a big lag. So we'll see. But it's a
So
similar
if we
story.
have 500,000 new units a year coming online,
Never going to happen.
No, I think so. Yeah, just for everybody's context, I think the federal government, I think, has promised like 500,000 homes a year. I think the record we've ever set was 270 for completions. Like I can see
the start was 319, I think, for 1 month. And so.
Yeah, but I think if you look at like completions, I think is what matters most for people. So like the record was 270. I wouldn't be surprised over the next 3-4 years, like those getting cut in half.
Wow. Really?
But I mean, that's an uneducated guess. But yes, that's my.
Your point is that they're going to go down.
What about an educated guess? Would that be better?
They'll get cut by at least a third.
Crazy.
There's nobody's starting new projects today. So completions, albeit a bit of a lag effect, those will get cut significantly. Like basically what I'm trying to say is like all these government targets it's the biggest lie. I don't even know why as a federal politician you would even start throwing out these targets today. Because
we're trying to win an election.
There's just no way you're just gonna have egg on your face.
Well, I think, over the last decade, especially, that the Western world has especially moved more and more, towards socialism, extreme socialism. Government should be controlling as many aspects of our economy and life as possible. So if something isn't working, they feel like we're going to get involved and we're going to fix it. Whereas if you go back in the 80s and 90s, the economy would like self-correct and do it that way. So that's where we are. So we will have this pendulum is going to swing back. That's where we're headed right now. So if government continues to get more involved in the economy in all aspects, whether it's housing or energy or you name it, it means that they're borrowing more and more, spending more and more, and everyone is doing it around the world. So that's what we look at all the time. I think it's the visibility with this is so clear, it's crystal clear where we're headed. And that's why, like your comment at the beginning of the show, Steve, today was, hey, this trend continues, like where we're going, and not just for housing, but everything. So if you're a young family in the GTA or Saskatchewan or somewhere, and you're thinking you want to buy a home, you first of all have to be comfortable with your employment or your business you're running. And if you're really comfortable, yeah, you have savings, you will buy it. If you're uncomfortable that things will deteriorate, you're going to hold back. I think that's what's happening with the private sector, and the government is trying to come in and, fill that void. And it sounds mean and cruel, but they shouldn't.
Yeah.
You have to let this play
Well,
out.
I think that's the one thing we were like, like the Build Canada Homes thing where they're going to like create a $13 billion agency and build these manufactured type homes. The one argument you could make is like it's a counter-cyclical policy, which is to say your private sector is completely shutting down. Nobody can build housing today because it's uneconomical and the market is completely dead. So the government's going to step in and at least attempt to fill some of the void through public spending. But it's interesting because from that signal perspective, what they're telling you is they've kind of given up on the idea of home ownership or of trying to help people get on the housing ladder. They're just basically saying, listen, if you're a young person, we'll build you a government-owned housing and you can rent from us. Like they've given up on that. They're not even talking about
you will own nothing and you will be unhappy. Is that the
Steve,
slogan?
in a weird way, that's like kind of the first honest thing that they've said in like 15 years. But I just want to touch on something that Keith had said, which is like the government's going to get even more involved in Canada. Honest to God, I don't even know how that's possible. If you look at employment as a percentage of total, it's at a 25-year high. Public sector employment is 21.7% as a percentage of total. Public administration is 5.9. That's a 25-year high. Government consumption, 22%. That's a 20-year high, 25-year high, or 30-year high. Government investment as a percentage of total, 18.6. That's a 35-year high. And government debt to GDP is 129% or whatever it is. And that's the best part. The tax take at a federal level is also at a 30-year high. I literally don't know how you could get more involved as a government in your economy than we already are now.
Explain what the tax take is, what you just shared.
Yeah, so so tax take, sorry, that's like a sort of colloquialism. It just means like revenue. So governments obviously generate revenue and they have expenditures, and the revenue comes from taxes, corporate taxes, income taxes, wealth taxes, excise taxes, like on cigarettes, duties and tariffs, which is also a tax. And at the federal level, it's now 15.3% of GDP. So it's about, let's say, 500 billion. That's the data I have is for 2024. So we're a year behind. And that number at the federal level, hasn't been as high since, if I'm careful, 2001, which is really quite incredible. At the provincial and local level, it's basically been flat for a long, long time.
And back at that time, wasn't that when Canada was first starting to experience their fiscal and debt challenges?
Absolutely.
Yeah.
Absolutely.
Yeah.
It was Paul
And
Martin,
that's-
another liberal government.
And that's the way it was. I mean, the way that they addressed it then was through, austerity, less spending, and stuff like that.
And the commodity bubble that bailed out Canada.
Yeah, because the commodity bubble was just starting at that time. Not bubble, bull market.
Well,
It didn't
excuse me.
go to a
Well,
bubble.
excuse me.
Yeah.
Excuse me. Bull market. Sorry. You're right.
Yeah,
Bull market.
absolutely. I mean, and so back at that time, though, there were very few other countries who were having those same challenges.
Mhm.
It's just the Canadians, really. And I mean, a lot of Asia had their problem in the late 90s with their, currency reserves and stuff like that. If you go to today, you can say, hey, Canada's in a very similar position as we were back in, is it 01, I think you said?
Yeah.
But if you look up those same numbers for the French and the Brits, I bet you they're all very similar on a relative basis.
You mean now we're very high?
Yeah.
Yes. Well, it's even worse in the sense for the Brits. I mean, the tax take as a percent of GDP is at a 70-year high for the UK. That's a well-publicized data point. The UK and France, the revenue as a percentage of GDP, Keith, remember we were looking at this chart? It's like 55 or almost 60%. I can't remember the exact number. If you bear with me, I'll dig it up. But it's totally bananas. It's like almost 2/3 of the economy. I have it right here. 57.3% is government expenditure as a percentage of GDP. Just to give you an idea, just to put that in perspective, the next biggest is Italy at 51%. So that's totally bananas.
Oh, mon Dieu.
I think this kind of gets to, I don't know, the just to tie in like the rest of the housing stuff here is,
Sure.
Rich, there was an interesting chart in the Globe and Mail this week, which shows a chart where basically the line just goes from the up down to the right hand corner, where it says average life satisfaction of Canadians under 35 over time. And so it just starts at like 7 back in 05, it's like 7.6 and just kind of keeps trending lower and lower and lower. And it's kind of in the low sixes now. So life satisfaction of Canadians under 35 continues to sort of plummet over the last 2 decades. And I have to think a huge function of that is housing. Absolutely. The inability to get on the housing ladder, to start a family, sort of the social contract that people were told, you go to school, you get a decent job, and you can buy a house and raise a family and have a decent life. And obviously that's falling further and further out of reach.
It is out of reach.
Full stop. Again, even despite your 25% house price correction in the GTA, it's still incredibly out of reach for the vast majority of people that live there. And I think the biggest challenge, of course, is still saving the down payment after tax dollars. And even as correction remains prolonged, I still think you're going to be talking about housing affordability. And that's where the government, again, the feds have kind of given up on that. They say, don't worry, we'll build the housing for you. You can rent from us. And that's sort of the outlook.
So I think all these things are sort of related. So by the way, in September of 2015, Justin Trudeau, former Dear Leader, said the following, and I quote, "We have a plan to make housing more affordable for those who need it most." And at that point in 2015, so, there had already been sort of a 10-year, let's say, divergence between real personal disposable income and house prices. And the data I'm using is from the Dallas Federal Reserve, which does excellent data on house prices and real disposable income. And basically, almost to the day, no, I'm joking, not to the day, but basically that year, house prices in real terms skyrocketed. They dipped in 2020 and then went and peaked in 2023 or whatever it was. And so the return, the decline that we've talked about from February 2022, that decline of 25%, has really only brought us back to what, 2020 levels, 2021 levels. And so it is, when you look at the chart, it's actually quite incredible. And I think the reason I bring that up is because it affects, you know, there was another article a couple of weeks ago talking about birth rates in Canada. They've collapsed. We talked about the year in which people will get married has collapsed. We talked about satisfaction. You know, you mentioned this average life satisfaction of Canadians under 35 over time, where 0 represents the worst life possible and 10 represents the best life possible. It's also collapsed around 2015, and it's all this idea that young people have been basically sacrificed. I mean, it's really incredible, whether it's deficit spending, whether it's central bank printing of money, which supports asset holders at the expense of working people. It's just everything that could have gone wrong for young people has gone wrong. And it's really remarkable how, sorry to say, these people are still in power. Like, I don't know what else to say. They have really sold young people down the river. It's
Rich, you know what's funny? There was like a talk. So that article from the Globe and Mail was kind of going viral. People like, see, satisfaction, like the youth in Canada have been like sacrificed. And there was like this talking head that's always on like the mainstream media. And so he goes out and he tweets and he like sort of tries to like counteract the sort of chart or the article and basically posts a chart showing median wages.
Mhm.
I think it's so he posted median household after tax income and goes back to like the 70s and like, yeah, it's technically higher, right? So Keith, this is the best part. So it starts kind of around like back in the 70s and 80s, it was kind of around 60,000. And today it's kind of around like 75,000. But like,
And what was his
how
point?
much of asset prices just like roofed through there? And that's, I think, where the true sort of gotcha moment is, right? Which is, I still think it's a function of this massive currency debasement, which is, you know, central banks say, oh, you know, we got a 2% inflation target. And meanwhile, house prices are going up 12% a year for the last, you know, nearly 2 decades.
It was bullshit. It was bullshit. It was a class crap analysis, because that man is in, I know who you're talking about. We're not going to give him any credit. He is fully insulated from the horrific economic and financial market and public policy that's been foisted upon young people for the last 10 years. So when he demonstrates the fact that, yes, in fact, he is right. The median household income has in fact gone up, and the Dallas Federal Reserve would corroborate that. In fact, you know, if you look at their website, they'll show you that the personal disposable income in real terms has gone up over the last 10, 15 years. But that like totally misses the point. And for him to just come out and say, oh, you stop bitching because, you know, your household and wealth has gone up. It's about asset price inflation. And it's just like,
So you're both saying the exact correct word, just so that the audience understand what we're talking about. So this other gentleman, what I'm talking about, your income, saying, hey, you know, you're actually taking home more money than ever before. You know, you should be happy. Obviously, though, don't you hate it when someone tells you should be something and you feel the opposite? But when Steve and Rich are saying, you know, we're talking about asset prices, just so everyone understands, that means housing, of course, and investment portfolios. So if you're a younger person and, you know, maybe your income is going up a little bit, but it's not going up nearly as much as what's needed to buy the stuff that you really want. You know, a home, family, happiness, you know, things like that. And, you know, it really is, because we've talked about this a lot, and, you know, we'll say it again, but we are at the end of this 40+ year cycle when rates go to 0% in 2008 and 9, and they flatline them for a whole decade. And they use QE and negative rates and everything. Of course, asset prices, so housing and the stock market and stuff is going to go up. I mean, what else would they think is going to happen? And, you know, so that's how you get this sort of social divide taking place, you know, with the demographic, you know, older people versus younger. And so I'm not surprised that the Globe and Mail had a chart, that is showing that, younger people are becoming more dissatisfied. So I would as well, because you could see the old people driving around, walking around, doing everything, and they've benefited not because they're smarter, they just happen to be born at a certain time. And the younger generations today, they're getting the short end of the stick because they were born at a specific time. But there is good news here.
Go
What's the
on.
good news? Yeah, I was waiting for Steve to say something, but he's kind of blending in with the
The
wall
good-
stuff.
Where, Steve? Are you there? Oh, there you are.
Okay, we couldn't see you. Maybe there's an opportunity to get some kind of a restructuring and reset. So if the economy works the way it's supposed to, and we think that the probability of some bond market liquidity crisis hitting is very high, that's going to level the playing field quite a bit, because this is going to rip a hole out of a lot of older people's assets. So the asset inflation they benefited from over the last 15 plus years, especially, that's going to have an enormous hole coming through.
Sorry,
And
say it again. What's your rationale? Just is that because they're holding bonds?
yeah, you would
Okay.
get an enormous destruction. And
Right.
so
Yes.
the bond market gets hit, which affects banks, especially. They will know they're going to be very reluctant to lend money to anyone to buy a house. And, asset prices will come down. That doesn't mean the stock market. I think the stock market will have a correction, but then it'll just fly to the moon. But for everyone who's young, your opportunity to get even with the older people, it's not that you're going to strike it rich, that you're going to strike them down.
No, don't say that.
Yeah, it's kind of
This doesn't
kind of a
sound
morbid
nice,
way
but
to
that's
say it.
that's the direction we're going then. Do you know what I mean? Like, again,
Sounds
like
like
this.
the French
This
Revolution.
is like a buy Bitcoin ad, Keith.
Yeah,
for young-
exactly.
for the young.
I know it could. Yeah, it absolutely is. And but I don't. Like, how does it work any other way?
But
Think
don't you
about
don't you
it.
find that super interesting? And this kind of ties into the next conversation, which is like when people like I know there's a lot of like debate on people talk about like gold, Bitcoin, and like we look at gold today at surging past $4,000 an ounce. USD, first time in history, new all-time highs. What is it up, Rich, this year? 40+%.
47 something. Yeah.
I think it's its best year since sometime in the 1970s.
Oh yeah, I did my homework for you.
Tell
And
me.
it's the best year to date. It's up 48 or whatever percent. I can't remember exactly the number. And it's the best year. I put it in the chat. Oh, this is bad podcasting. It's the best year since 1980.
1980. Okay. So
1979, I should say.
several years after you came off the gold standard.
Yeah, that's right.
But it's really interesting that this is the year it's really starting to fly higher. I know a lot. We hold gold, for clients. But a lot of people who are in that world, they've held it for a long time, and they're holding it for protection. And at the exact moment in time that it's finally doing what people had, it was really as an assurance policy. So you weren't buying gold bullion to grow your wealth. You're buying it to protect your wealth. And so what catches our attention here, that it's okay, now it's doing that thing that everyone wanted it to do. Meanwhile, the other markets haven't done their thing that should be happening as gold is going higher. And that thing, by the way, like, there are losses coming up here. So either this move in gold is false and is going to come back down hard, or it is sort of foreshadowing to say, hey, something is a bit off here, and the reaction from gold going higher is going to be felt in another market. And that's what we find really interesting. So again, it continues to play with that trend that you spoke about earlier, Steve. You were talking about the housing market, of course, but what's the housing market? Think, oh, it's a house, it's worth something. Housing market is a debt market. Think of it that way.
Yeah, that's true. Yeah, true.
There's so much. For every asset, there's debt behind it, because who's going to buy a house with cash? And you have that there. So if there is a moment in the bond market, that is losses on that side, and that's
I
what
still-
should capture everyone's attention here.
Yeah, I still think it's a hedge against currency debasement. It's just probably not going to be your best hedge, right? I mean, you look at gold, you look at Bitcoin, equities. I don't know. Rich, have you ever read that book? I think we've talked about in the show before, When Money Dies.
No, I haven't. That's in my homework.
I think it's still probably one of my favorite books.
What's the ending?
It's basically on the Weimar Republic in Germany. I don't know if it was after World War I or after World War II.
After World War I.
Yeah, anyways, it just talks about sort of the psychological elements of the currency debasement that they had there. And basically the governments and the central banks were left with really no choice but to basically just keep printing money.
So I challenge that no choice bit. And the book that I would give you to read is Lords of Finance, which won a Pulitzer Prize in 2009, and is about how the four central bankers, France, Germany, UK, and the US, basically were totally at fault because instead of holding the line and doing the right thing, they allowed governments to do all kinds of shenanigans. Let me know if you've heard that story.
But it's interesting because, like, basically,
what really happened for you two?
the central banker in Germany basically was like, I can either get fired or I can print the money to support the government's.
Yeah, exactly.
No, but I'm not joking here. But what really happened, without getting into both of those two fine books, the reason they had to print money because no one would lend money to Germany.
Right.
As soon as foreign investors and the private market, as soon as they say, we're not going to buy your bonds anymore, that's when it collapses. So in Canada, who's buying federal debt these days? Everyone is. Pension funds are buying it every single week, every single issuance. At the moment investors stop buying it, that's when yields go from 3 to 6 to 12% very quickly. And that's what happened in the Eurozone with Italy back in 12, I think it was, something like that. The moment you are shut out from borrowing, which is the bond market, this is the theme we're talking about here, that's when it's game over. We're not there yet. That's not, but this is what all the talk is about, we have Loonie Hour math, guys. By the way, everyone, you're going to be shocked when you hear this. We are recording on Wednesday this week. It's not Thursday. So we're a day early. But we have 27 days till the Canadian budget comes out. And we'll be covering that very closely, of course, as we get closer to it. But in addition, we have the French story that we'll jump into. The Germans had like a spectacular narrative this week as well. And for once, the Brits look like maybe they're they have the third worst financial situation in Europe. But it's all coming back to this bond market. And if you can't borrow, that's when things get dicey. And maybe we'll get a third book, Rich.
Ooh, I'd love that. But guess what's going on with the US? Sorry, I know this is a bit of a distraction or a digression, but the UK 10-year government bond yield is about to crack like a 20-odd year high.
Is that today?
We're at yesterday we were at 4.79 on the UK 10-year.
And what was it in 21? Like
in 21 it was like 1%. It was like 1% or whatever.
Hey guys, sorry to interrupt the show. I want to let you know a special announcement. October 21st, the Loonie Hour is coming to Vancouver. We'll be co-hosting an event with the Canadian Real Estate Investor Podcast. We'll be doing a panel on the state of the housing market, followed by a live Loonie Hour podcast on Tuesday, October 21st in Vancouver at UBC Robson Square downtown. There's an Eventbrite link in the show notes where you can grab your tickets to that event. Come hang out with the Loonie Hour, come have a drink, socialize, meet and greet, followed by a housing panel and a live podcast. Really looking forward to meeting all of you October 21st in Vancouver.
Can we just sort of unpack this then a little bit further, which is to say, you kind of bring it back full circle and everything sort of ties in, right? Which is like, we started the podcast saying, listen, housing in Canada, particularly in the GTA, is crumbling. Nobody can build new housing. Meanwhile, city budgets, they were charging up to 30% of of new housing was just through development charges and fees. But if nobody's building new housing, government now has a huge fiscal hole that they got to figure out there, which spills through into the provinces and the feds. And there's just so much debt in there that everybody needs to basically prop up these asset markets, right? Higher asset prices go, the more capital gains, revenues, shareholder revs, etc. And so everybody's desperately trying to sort of keep sort of this asset bubble intact in order to sort of keep the debt whole. And I find that really fascinating, Keith, because we talk about the race to zero, which is to say that there's this huge refinancing window across all these sovereign nations. And we're just seeing more and more central banks having to cut rates into higher inflation. New Zealand was out this week, Keith. I think they cut 50 basis points, correct?
Yeah, that was just a few hours ago. And that was a surprise, to the market. And they did sort of caution that there's more cuts coming as well.
So more cuts from there. You got Germany's a mess. France is a mess. Japan's a mess. 30-year bond yield, I think highest of all time, ticked higher. Rich, you just said the UK 10-year.
We're about to crack the 20-25-year high, which is fascinating because they just cut interest rates at the front end of the curve, but they're losing control of the long end of the curve, which is what all these assets are priced off of. It's really meaningful.
Oh mon dieu, that's the wrong country, right?
Zut alors!
Right. So you know what I mean, Keith? Like I just look at it and say, like, well, what's the solution here? Because the solution is nobody wants to go through the painful debt deleveraging and the sharp decline, let's say, in asset prices that would follow. And so you're effectively left with run deficits, print and beg the central bank to finance you.
Yeah, I mean, that's exactly where we're going. Oh, by the way, the Canadian 10-year is not showing deterioration at all. Mm-hmm. Correct, Rich? It's pretty flattish.
Yeah, don't release the budget.
Don't release the budget. We need T-shirts with that or something. It was now people would say, these days people are either pro the government or against the government from a political side. People who are pro would say, see, that shows the Canadian economy and everything is strong. If the Canadian
best in the G7
strong, yeah, I would say, well, it means everyone else is wrong, and then those bond markets, they've reached their bottom or their highest yield, they'll come back. Or alternatively, the Canadian market is going to have its moment, and the 10-year is going to take off. So if only there was an event coming up in 27 days, which is going to be monumental.
But Keith, I have just a question, just so people understand. I mean, surely that negative news has been priced in, right? Like Stefan Marion, who we're going to try to get on the show. He's the chief strategist for National Bank. We've quoted him many, many times. We've ripped off his charts many, many times as well. He said, the budget's going to be about 100 billion, which corroborates the guess from Trevor Tome, University of Calgary professor. The market's priced that in, though, haven't they?
No, because I don't have a valuation. So again, I keep going back to cash flows that are coming into a market. As long as the job market remains positive and somewhat strong, there's money coming in to the market every 2 weeks. So if you're $1 that goes into the market, maybe 65 cents goes into the stock market, 35 cents goes in the bond market. It lands on the bond fund desk. It's automatically buy. So you have that taking place.
Keith, I got a question for you. What if you, again, I'm just putting my tinfoil hat on here. Let's just assume if Mark Carney is the genius central banker that everybody believes him to be, and I have no doubt that he's a smart guy, would you not almost try to float an inflated number? So you put out you kind of put the little breadcrumbs out into the market to say, oh, it sounds like it's going to be 100 billion. And then when you announce in November, it comes in at 75.
Yeah, I would.
Right. I mean, like that's
And
still a
I'm- and
huge,
I'm-
it's
and
still a
I'm pretty
huge number,
friggin-
but markets were pricing in almost or expecting 100 and you come in at 75.
I'm pretty freaking smart, and I do the same thing as well. Yeah, you have that happening, of course, but the big thing with the Canadian number coming up, for the first time, they're going to break mathematical traditions where they're going to try to carve up their budget so it looks better. And as we get closer and closer to this budget day, you're going to hear more and more about the operating budget and the capital budget. And you should absolutely prepare with the day it comes out, or if it's leaked the day before, you're going to see, oh, the operating deficit is 32 billion. It's going to be some number that goes, wow, they did it. This is amazing. But they're just shifting numbers from an operating side to a capital/investing side. So and if you put the numbers all together like we have every other year, because you want to compare apples to apples, it's going to be a big number. Is it going to be 100? If I'm these guys, I'm doing everything I can not to hit triple digits. You want to bring it down, but they could be playing that game, Steve. Maybe, or I would imagine there's so many moving parts here, and they're just they're just trying to keep things together in time, and they're looking at the bond market every single day. That's coming, and we have the Bank of Canada meeting at the 29th, I think it is.
Yeah,
So in a couple of
October.
weeks.
Yeah,
Yeah, in a few weeks. And you know what? They cut rates, which I suspect they will, a couple of days before. They got to do things to help them out. And is that right or wrong? It's sort of neither. It is what that is the game that's going on here. Because you go back to Germany, the Weimar Republic, whatever, you always want people to buy your debt. Because the moment that stops, that's when you're in trouble. And if we're running Canada right now, I mean, we can look at it, we're saying, oh man, do we have any friends? And it'd be, maybe Ben would be our friend for a while. That's it. But otherwise, you just want to hold everything together, and let the French or the Brits or someone else fall apart first. You don't want, because see, if you're saying, is there something that they can do, to sort of fix all this? And there isn't. They can push the boat out a bit further, but there are, we keep saying this all the time, there are losses in the system that have to be realized. And as part of the game, you don't want to be the first one to do that. Because if you're the first one, you're going to get just crushed in the market. Your currency will get hit. Your bond market will get hit. The banks won't.
Well, who's the first one? It's got to be the UK, no? Japan?
France.
We've been saying for a while we thought it would be the Brits, but that's just based on market reactions. Because I think politically they're pretty solid, aren't they, Rich? Like I don't think they can be forced on an election.
Labour Party in the UK has an enormous
yeah, they have
majority.
commies on one side, more commies next to
Yeah,
them.
they have like a 300 seat majority or something ridiculous like that. So even
Yeah.
though reform is crushing them in the polls, it doesn't matter. They don't have to run an election for another 4 years.
So you look at what's happening with France now. So people who are not following the story, if you look at like the fan dot matrix of the French Parliament, I'm going to make up the numbers, but it's basically 48% on one side, 48 on the other, and there's little groups in the middle. They haven't been the government. So Macron is the president. He's not the prime minister. The prime minister sits on the house, whatever that is called in France. They haven't been able. The parliament hasn't been able to get a budget passed now for some time. It keeps failing. As that fails, the president, Macron, he has to step in and go, okay, let's appoint a new prime minister. Then this guy sits down, they carve up a new budget, and again, it's not accepted. What's really interesting here is that, Rich showed earlier how the French data is just horrible, right? It's just government is everywhere. So, by default, they know this, and they're actually trying to make the budget a little bit better. I think it's less spending. Is that what it is, Rich? Like that's what they're trying to do.
Well, it's already 5% budget deficit. They want to make it 4.5% budget deficit.
Yeah, it's like they want to change the direction, the trend. And of course, everyone else in Parliament is saying, no way, man, you got to keep spending. Because if you stop spending, I'm not going to get elected and stuff like that. That's what's happening. So they just had another prime minister had to step down. So again, today is Wednesday. We're recording today. I don't know what's happening today. They're either going to have a new budget. And if they approve the budget, you're going to get rioting in the streets. Because, the people want to retire, right? They want to get their benefits and all that stuff. If they don't pass it, then there's a decision to make. We might have to call an election for parliament, not for the president, but for parliament. If they do that, then the current party in power, they're likely going to lose control. And then you get the right, or they would say the far right party is going to come in. The EU does not want that. And that would sound like I'm lecturing, by the way, but all this comes together. So they can't, if they do that, that's not good. Because the EU, they're going to lose it. Maybe then let's call it a presidential election again. Let's get this done. And if he does that, he may not win. And the EU won't like that either. So absolutely, financial markets are reacting to this. And meanwhile, Britain loves it because for a while they were first up, to get like a financial massacre taking place. And as I said, you don't want to be first. So like Steve, who's first is looking like it could be the French. And if you look at the euro over the last few days, like it's boom, boom, like it's getting weaker and weaker here. So that's and the bond market is deteriorating. So maybe it's the French right now. Who do you think, Rich, would be the?
Well, I just think, I just want to address some of the counter arguments, which is we're always very critical of government spending, government involvement. I think when you look at the data, it's very clear that the pendulum, again, just respecting data and historical precedent, has swung very much to one side, certainly in Canada. And it's true in the UK, where you have government revenues as a percent of GDP at a 70-year high. And so, and the other thing I think is really important is that when you look at sort of incomes for French and British pensioners versus their working age counterparts, there's been a huge divergence. Stop me when you've heard that before. So it's the same thing. There's basically the baby boomer generation have written themselves fantastic checks, have basically inflated their assets to, frankly, an unprecedented degree, and now are voting basically for that public purse. And there's just simply no political appetite to tell them they cannot have their cake and eat it too, to quote a former French queen. And that's really ultimately what we're struggling with.
So at the same time, so in Canada, you can get CPP at age 65. That's the standard. You can get it at 60 if you want to, of course. In Germany, they just floated the idea to extend the retirement age to 73. So for all of our older audience, think about if all of a sudden Ottawa just came out and said, okay, guys, CPP doesn't start until age 73 now. You're going to lose it. You're like, what
but
the
it's
heck?
Got to rise. But it's got to rise.
Yeah.
And so the reason, so there's life expectancy in Germany, it's 81. So you're saying, you know what? You're going to enjoy 8 years of retirement, of which 6 might be eating your food through a spoon the whole time or something. But my point is that the demographics are aging. So that's why you have this, this immigration strategy taking place in Europe, especially. And it's the younger generations are taking on more and more of the financial burden to pay for the aging population. That's what's happening. And it's the same thing. I imagine the Japanese data is equally horrendous, but it's a tough challenge.
Yeah, Rich, you mentioned it needed to rise. So yeah, I remember in Canada under Stephen Harper, the Conservative government there, they raised the eligibility for OAS from 65 to 67. And this was reversed once Trudeau got in. He put it back to 65.
Yeah, the Liberal Party is for the boomers, by the boomers, of the boomers. I mean, I disagree with the not raising the retirement age. The retirement age at 65 was a completely arbitrary number that was picked in World War II to incentivize people to basically work in the factories to build bullets and tanks and guns and shit. And at the time, life expectancy was like 64. So you're expected to live to 64, and your retirement age was 65 when you'd get your pension. The thing is, they left that number flat, and life expectancy has basically gone up in a almost perfectly linear trend until COVID, and then fentanyl, and they allowed drugs basically to proliferate, I don't know, whatever, to like basically they abandoned any kind of drug regulation in Canada and the United States. And so there's something out of whack here. 65 today is not the same as 65 in 1945. And so I understand the idea of lifting the retirement age, but that doesn't address the overall issue, which is just there's just too many unfunded liabilities, and these countries are not anywhere near productive enough. And so there need to be losses. And what we're all doing, it's like musical chairs. The music has stopped, in my view, and everyone's just trying to jockey to see they don't make sure they don't lose out on a seat, in my view. I think that, like, remember that movie, the great movie called Margin Call? I don't know. I think it's actually a better movie.
Yeah, it's a good movie.
It's actually a better movie than The Big Short. I know that's blasphemous on this channel.
Debatable, but very good. It's very good.
And the guy from he flies in a
Rich is full of shit, by the way, guys.
But anyway, for people who haven't seen it, the guy from like JP Morgan, his $5,000 suit, flies in a helicopter, and he's talking to all his analysts. And he's like, I get paid to tell you when the music stops. And the music has stopped. And the argument in 2008 and 9 was that they wanted to like sell all of their expensive assets and de-risk and whatever it is. And I think in many ways, what we're watching, whether it's Bitcoin and gold and all this machination politically, and Keith always talks about the collision, whether it's economic or political or sociological, it's all the music has stopped.
Well, the social part, I mean, that's from Steve's Globe and Mail article. The chart that you were again, it's all tied together. So here's the headline from the Telegraph. That's one of the larger papers in the UK. France's chaos is a warning for Britain, right? Lessons from Paris: bond markets will not tolerate sky-high debts. I mean, it's exactly, this is not, the British version of the Loonie Hour. Like, it is a paper with other stuff attached to it, but everything is tied together. I think that's one of the great things that we've helped to grow with the Loonie Hour community, is to appreciate that things are happening outside of Canada that will affect Canada. And we always talk about the trend all the time. Is it strengthening, weakening? Again, we continue to go down that same path.
So if Canada, Rich, is going to grow these massive deficits, right? Let's just assume that we do run $100 billion deficit coming up. You have to derive growth from somewhere. You have to pay for effectively all of these programs. And there's been a lot of discussion in the media recently. There's been Alberta versus BC. So Danielle Smith, I think was it last week? She proposed a pipeline running from Alberta through BC. Effectively, she was going to front, what was it, 13 million? Yeah, to get the party rolling, to make sure that project ends up in the Canada infrastructure of major projects. So basically, it's interesting to sort of watch this play out, because I think this is actually, like, if anyone remembers our conversation with Doomberg prior to the elections, Doomberg basically called this, which is like, listen, Mark Carney wrote a book on values, but he's a guy that will do whatever it takes and will ditch those values to ride what is hot and popular at the time. And Doomberg went on to basically say Carney would harness fossil fuels. We'll see.
He was a weather vane, I think is the language.
That was the word. Yes, correct. We'll see. But I think Danielle Smith is kind of putting the pressure on Carney. And so we'll see ultimately how this plays out. But I don't know if you guys have been watching the discourse between Alberta and BC. Like, David Eby was basically on posting a public video on Twitter. He got ratioed horribly. Like, he was almost in tears, saying, like, we can't build a pipeline. it's bad for our environment, and it's not, no private opponent has stepped up, and then it's just interesting to see that Danielle Smith's now going on public shows all across Canada, sort of downplaying David Eby. So Carney's kind of in the middle of these two, and it's gonna be interesting to sort of see how that plays out.
It's a good thing I'm not in control of some things, because if I'm I would literally turn off the pipes to BC and say, hey, just as they need it. The ideology is driving policy decisions everywhere now, and there's no science behind ideology. It's you believe it, and becomes like a religion, and then that's it. And then hard, cold economic data and facts, it gets pushed to the side. And this goes back to this collision theme that Rich just brought up. Like, this is another perfect example of it. And I'm sure the same thing is happening like within France and within Britain as well. I know they have enormous social problems in the UK right now. And again, all this is coming to a head.
Rich, if you want to
go ahead,
sort of, if you want to move away, like the whole idea was like this elbows up, we're going to move away from the United States. We need more reliable trading partners. We're too reliant on the United States. The most obvious way to do that now is to build that pipeline from Alberta to BC, no?
Yeah, of course. It's ridiculous. It's kind of, I don't believe that people are actively working against Canada, but man, David Eby tests my patience with that view. British Columbia is one of the largest exporters of coal. And he exports it to China. He just gave them a massive deal to build ferries in China, which will use coal and employ Chinese people. The idea, I think, to quote him, he said that, oil pipelines would hurt the economy of British Columbia. That's just an out lie.
Their second largest export's natural gas.
Yeah,
number one is coal.
I'm trying to be nice. I just think I don't.
So how does he defend that
view
then, Steve? Like, how is that
position? Keith, I don't think anything is rooted in like economics. I genuinely think these people are well-intentioned. I just don't think they're very smart.
But he's a lawyer. He's not a total idiot.
No, but I just think it's like, I think you just get driven
by... Rich, that's making an assumption.
No, I think you get driven by ideology, right? Which is like what Keith said. I think like, okay, I mean, the weirdest thing, and we've joked about on this podcast before, is like, so BC's, I think their second largest export is natural gas. Okay. So, but then we have all these regulations on new housing in many parts of BC, many municipalities, where you can't build new housing with natural gas as your primary heating source. So it's okay for you to export it to the world, but just don't use it or don't burn it here locally.
It's ridiculous.
You know what I mean? It's just like, economically, it doesn't make sense. It's just an ideological.
Well, it's not logical at all.
Yeah, it's
and
totally
same with the coal exports as well. Like they have
huge coal exports. But like, I just want to remind everybody where we were 6 or 8 months ago. Donald Trump was going to invade Canada. It was an existential threat. We needed to team up, elbows up. We needed to work together to fight the big bad orange man. And before the hockey season's even really started, I think all of that rhetoric has been exposed as the fraud that it was at the beginning. Because no one's really doing the thing that we need to do, which is, if you genuinely believe that Canada needs to pull itself away from the United States, one of the obvious, most easy, like basically it's a easy bake oven, Betty Crocker, already packaged. All you need to do is crack an egg and add some water, and it's done, is build a pipeline, or 20 or 100 from Alberta to the BC coast and ship oil and gas to Asia to stop the US from being a monopsony. So monopoly is when you have one seller, monopsony is when you have one buyer. And we sell 93% of our crude oil to the United States. The reason that is because we have 400,000 kilometers of pipeline going north-south and south-north or whatever. And the Trans Mountain Pipeline or whatever demonstrates that if you just add a little bit of capacity to that goes east-west or west-east or whatever the hell it is, you right away change the math on all of that. And the spread between the Western Canadian Select and the West Texas Intermediate collapses. And all of a sudden, America has to compete with China and the rest of Asia for the oil and gas that we produce. And so when David Eby says that, I know I'm trying not to think that he's working against Canada, but man, the guy makes it hard for me to believe that. Like, that's it.
Reg, it's interesting because out of all of this right now, it's going around in the media as they're saying there's this debate between Alberta and BC. Eby's going to try to block it. He doesn't want to allow it. Alberta wants to go through. There's discussion, and Carney was at the White House yesterday, where it's believed the Keystone XL expansion is back on the table. So that was blocked by Obama in 2015. Revived by Trump in 2017, and then canceled once again by Biden in 2021. So it's back on the table because they're basically saying, listen, it's probably going to be easier for us to go south back to the United States than try to go through BC to the coast, which is ironic because then you're doubling down on your dependency on the United States.
We're never not going to be, the US is never not going to be the largest trading partner for Canada.
Well, I agree with you, but it's just kind of ironic to sort of see this come full circle, which is like,
yeah, no, I get it. I mean, that's a leverage play. I mean, that's just politics. I think that's just like a negotiation tactic. Like, if you don't give us what we want, we're going to just double down on our going south. The truth is, there are 400,000 kilometers of pipeline that go north-south. There's a fraction of that goes east to west. Fossil fuels aren't going anywhere. Canadians need it because we have shit productivity, high debts, and we have capital flight. And if David Eby and Mark Carney, and I would suggest the gentleman from Quebec, Blanchette, want Canada to not have a massive bond and or currency crisis, they need to shut up and get out of the way and let private capital do its thing. That's my view. I guess,
Rich, what you just shared with us the last 4 or 5 minutes, I think it's probably one of the most important views that our audience has heard in a long time from our show. That was really good.
Thank you.
God bless you, Rich. Well,
I guess just like one last thing, I just think I get really frustrated because I watch CBC and I watch CTV, and I wrote an email to Vasi, who I do like, and I've written an email to some of the connections that I have with the CBC. And no one, there's all this like bloviating over climate and the constitutionality and the politics, but nobody ever just lays out the raw economic reality of Canadians' situation. And I find that extremely frustrating. And so I wrote them an email and just like laid out the charts and said, please discuss this conversation from the impact that will have on working class people. Because if you believe in the welfare state, which I do, if you believe in free healthcare, which I do, if you believe in funding a strong safety net for people who are less fortunate or have difficulties in their lives or whatever, which I do, the way that you do that is by generating wealth and is by improving the productivity growth of your country, by encouraging foreign capital to invest in productive assets. And you cannot have two things. You cannot have an obstinate, intractable sect of your politicians say we're never going to build anything ever unless it meets a narrow criteria and have a very generous welfare state. Those two things cannot coexist. And Canada could be one of the best and richest countries in the world if these people just read a textbook on economics for 5 seconds.
I've never heard anyone like critique on like mainstream, like who bankrolls the green energy movement. That's which I always find interesting, China dominates that space.
I have a story for you.
Yet they added 95 gigawatts of new coal capacity in 2024. That's 64% of their power comes from coal. So now they added 95 gigawatts of coal capacity last year alone, which is more than the entire state of Texas.
That's more than the whole world combined.
Well, yeah. I mean, yeah, Texas generates 84 gigawatts of power. So they added 95 gigawatts of coal capacity alone. So they built enough coal plants in 1 year to power America's largest state grid.
I'm going to put my tinfoil hat on. This doesn't usually happen, folks, so buckle up. Germany shut down their nuclear power plants. They had 6 left over. There's something like 23 gigawatts per year, which is a lot, and they shut it down to 0. And this was a function of the Green Party's influence for like 25 years. They've been protesting. And there's rumors that Putin actually funded all of that stuff, which I thought was really interesting. There you go. That's my one conspiracy theory for the year.
Makes sense. Well, as always, it's been a pleasure, guys. We'll continue to monitor the debacle that is these sovereign finances. And as always, we appreciate the support. We'll see you next week.